Spirit Airlines just filed for bankruptcy, again, months after it said the last restructuring fixed things. The company insists flights, tickets, credits, and points are still valid, but flight attendants were told to prepare for all scenarios. What went wrong, what changes now, and what this means for passengers and staff. On Friday, Spirit said it has filed for fresh Chapter 11 protection, the second time since late 2024. The airline says it will keep flying, honoring tickets, credits, loyalty points, and paying employees during the case. CEO Dave Davis: the last process cut debt and raised capital, but much more work is needed. The company says it will keep flying, honoring tickets, credits, loyalty points, and paying employees during the case. Since 2020, Spirit has lost $2.5 billion, now carries about $2.4 billion in long-term debt, and burned roughly $1 billion in free cash flow by Q2. Management already warned this month of substantial doubt about staying in business over the next year. That's accountants speak for, the cash math doesn't work without big changes. The cash math doesn't work without big changes. Spirit pioneered the ultra-low-cost model, bare-bones fares, paid add-ons, but post-pandemic demand shifted. Big airlines copied the cheap fare tactics and lured travelers with more perks. Costs rose, fuel, labor, leases, while Spirit tried tiered pricing and premium-ish upsells that didn't close the gap. Reuters also notes engine issues and broader macro headwinds stressing operations. The ultra-low-cost carrier model is built on maintaining a significant cost advantage. You can still fly. Bookings remain open. Existing tickets/credits/points are valid. Expect schedule tweaks as the company retools capacity and tries to raise cash, possibly via asset sales, older aircraft real estate, and route pruning. If you're risk-averse, book with a credit card, monitor emails and app, and consider backup options on critical trips. Spirit says pay continues, but the union representing flight attendants told crews to prepare for all possible scenarios, practical advice given the uncertainty. Separately, Spirit had already outlined pilot furloughs and captain downgrades slated for October-November tied to lower 2026 flying, signs of a tighter operation ahead. Second filings are nicknamed Chapter 22. They're harder, but not impossible. Tools Spirit could use now: renegotiate leases and vendor terms more deeply, sell, return aircraft to raise liquidity and shrink capacity, refocus network on cash-positive routes, slow, premium experiments. New dip or equity if investors bite risks, weaker brand confidence, tighter card processor terms, and the chance a judge or lenders push toward liquidation if the plan doesn't pencil out. Court filings, details on financing, lease motions, and proposed business plan. Schedule updates, route cuts, frequency reductions, fleet moves, labor notices, any expansion of furloughs or base changes. Competitors, majors and ULCC rivals pouncing on Spirit's markets with capacity and promos. Bottom line, Spirit says it's business as usual while it restructures, but the numbers demand real change. If you've got upcoming travel, keep your reservations but stay flexible. Should the US still have room for a pure ultra-low-cost carrier, or is the market telling us to evolve? Sound off in the comments and I'll link key sources below.